Hello friends, this is Raj Sastri from Raj Option Trading. Today is November 11, 2021. Let's talk about Paysafe Limited. Paysafe Limited is a technology company into fintech. So stock tumbled big time today. Let's see if we can buy this stock or what's the best strategy for this stock here. So they power everyday connected payment solution for ambitious business. So let's jump in and take a look here. So let's take a look at the company overview, major ETFs holding Paysafe, competitive landscape, review few charts, look at the deep dive of Paysafe here, and look at the financial summary and stock performance. And finally, let's go with the final verdict. Should you buy this stock or should you hold it or should you sell it? So with that, let's jump in and get started here. So what is Paysafe? Paysafe helps you with the connected payments, and whether you're a restaurant chain or a small shop, you want the payment solutions, Paysafe can help you. They can do the business at scale here. They're a global leader and they also have security. Look at the name here, it's a Paysafe. They can safely help with the payments and they do the connections here, whether it's your bank, wallet, various other institutions, they can help you with the connections. So with that, company looks like a legit here. They want to do the right thing here, but stock tumbled big time. So as you look through here from an earnings call, they basically had inline guidance here for 3 quarter here, a little bit softer revenue, and they also did very well on their execution strategy here in the North American gaming area. They're doing very well, and they're also getting into crypto. So this is where they are going into adjacent areas here and really expanding their total addressable market. And one weak spot here is the digital wallet. So digital wallet did a little bit weaker than expected here. There is some performance challenges. The company is addressing this so that they can do they can be very well positioned for long term here. And they're also resetting their expectations of financial outlook for 2021 and 2022. The moment Wall Street hears about reset financial outlook, Wall Street goes crazy. That's why stock tanked big time here. Let's see what we can do. And from a volume perspective, nice 19% volume. That's great here. It's a big payment network. And revenue growth is 2% here and also 5% year over year here. So overall looks like it's a good play here. Only negative comments is around digital wallet here, weaker than expected revenue here, and also resetting expectations for financial outlook. That really did a number on the stock here, came down big time. And as you look through here, they're doing great progress in North American gaming here. They're partnering with the Fubo, Sportsbet, Play Up, and Superbook here. And I think they're ramping up big time. I think that's a great story here. That's a great expansion. And they're also growing with the digital commerce verticals here with these players here. I think it's also very good here. They're making progress on the strategic priorities, and I think they are not worried too much about short term here. They're really going after long term benefit here, and they're also making more progress. As you can see here, they are really achieving their cloud here. They're moving everything into cloud. That's a great strategy going forward, and there's also some cost savings here, and they're also doing the acquisitions. That's a great play here. Companies like Paysafe, they need to acquire to grow here. This company is not afraid of acquisitions here. They really acquired this Pago Effectivo here. I think that's closed here, and they got a bunch of acquisitions under their belt, and they're really integrating them into their network here. That's a good story here. They grow organically as well as through the acquisition. That's the way to go. And as you look through here, why this stock tumbled seems to be doing very well. What happened? As you look through here, the CEO Mac Hugh, he basically said, their EBITDA is in line, but they got some softer than expected revenue, and also they've got challenges within their digital wallet business. The moment Wall Street hears the challenge, and digital wallet. It will do a number on the stock here. That's why it came tumbling down. Stock drops 41% after the guidance cut here, and also they miss on the revenue. That's why they miss on revenue. They cut the guidance on the digital wallet and narrow the full year guidance. That's why stock came tumbling down. Look here, one day 41%. That's a huge drop here, almost cut in half today. And they also reset their 2021-2022 financial outlook here. Their guidance was 1.5 mil to 1.5550 million here. They came down to 1.4 to 1.480 here. So that's where they dropped it down from 9% to 5%. Wall Street did not like it. That's why stock came tumbling down. And as you look through here from a context perspective, background perspective, they're into digital commerce solutions here. They got Paysafe network worldwide. They also provide e-cash type solutions. Whether you're a gaming play or any small company, they can provide you the digital connected solutions here. Stock price is 4.25 after dropping down by 41% here. Market cap is $3 billion. As you look through the stock chart here, look here, stock went up back in 2020, came tumbling down big time. Look at this huge big candle. I mean, this happened, something similar happened back here, but this is very huge here. So analysts are saying buy at this time. I'm sure analysts will change and revise their targets. I've seen some target cut already. This could be a little bit old news because some of these networks are a little slow to update the consensus estimate here. Right now, I think it's probably hold or sell. So as you look through here, they provide some soft guidance. They cut the guidance here. Stock is falling hard and tumbles to record after Q3 earnings. Revenue guidance cut. That's the big story here. Before the earnings, folks are wondering, is it finally safe to buy Paysafe stock now? I think after this huge drop, I can tell you it's safe to buy now. So with that, let's jump in here and look at the CEO here. We got CEO Phil. And his background checks out. As you can see here, he's got 25 years of experience in the banking and payments industry here. He was with the various companies before. He got thesis here. He drove 30% revenue growth. He was in Citigroup. I think he's got a good background here. CEO checks out here. And as you look through here, this is a great approval rating, 96% approval rating. I think he's doing something right. The employees seem to be liking the CEO here. That's all good here. Next, let's look at ETFs or exchange traded funds with the Paysafe. As you look through here, we've got a lot of these big exchange traded funds like Russell 1000, Russell Mid Cap, and various Russell indices are holding big position of this Paysafe here. And these indices have done very well in 1 year. No big deal here. So that's why it's this company is has got various funds who are owning this company, not a small type stock here. It's a mid cap type stock. So which is good to know. There is a lot of support from these institutions. That's the way to go. And as you look through here, let's look at Paysafe and its peers. We got a lot of these industry peers for Paysafe. I have sorted this by 1 year performance. Stock at the top here, I think somewhere here, TRIT, up nicely here for 1 year. And from there onwards is a descending order. As you look through, as usual, keep watching the RSI levels. When the RSI is low, like 42 here for MoneyLion, you could buy this a little tiny stock here. Institutions are scooping up MoneyLion. You could buy along with them, and I'm sure you'll make a nice profit as you move forward. Right now, stock has been down a little bit, as you can see here. It's just a new IPO, maybe a month old or so. That's why you don't see a 1 year, performance yet. And then you got OPFI here, $7 stock here. This you can buy this one also. It's trying to go higher, as you can see here. Right now RSI is 53. You could buy slowly, or you could wait for a little pullback, let it come down a little bit, then you can buy. And then you got few more as usual. watch the RSI levels. If the RSI is below 55, you could slowly buy and accumulate. Look at this very small company here. It's USIO, $6 stock here, $149 million market cap here. Keep watching. Nice sales growth, nice gross margin, and look nice 289% 1 year performance. I would buy these type of stocks here. I think they will do very well as you go forward. Nice performance here. I think it's a great one. And then you got a few more here. Green box, it's into crypto, as many of you know here. Nice sales growth, nice gross margin. Even green box is a good one to buy on any down tick here. It's already nicely down here. 9% short ratio here. Company doesn't it's a up and down like trading stock here. Whenever it's down like this, it's good to buy. I would not hold this one in your retirement account, but it's a good trading stock. And even OPFI, look here, high short ratio here. That's why it's squeezing higher, as you can see. And then we got a few more. Keep watching the RSI levels here. We got a few more here. We got CTLP. We got Shift 4, which is now going higher slowly. It's still a good one to buy at these levels. And then you got a few more as you can scan through here. You could look at these names here, even DBD, low dollar stock here. You could buy that one too. And I got a few more here. Fiserv is a great play right now. RSI 39, you could buy this great stock here. And we got a few more like Western Union, it's also a good one here. And we got Fleetcor dropped big time, as you can see here. And we got a few more as you can scan through here. So nowhere in this chart you see PSFE or Paysafe because it's so bad from a performance perspective. After this huge big drop, it went down to next chart here. It's almost at the bottom, as you can see here. Nice 41% drop today. So I would be really, it's really intriguing to look at this stock at this level here. It's a great company. They're trying to do the right thing. I think they're also painting the picture as they see it, not sugarcoating it out at all. That's why it came down big time here. And I also like stocks like Pags here, great one. GPN is also a great one to buy at these levels here. And even QIWI, just a $8 stock. Look at nice performance here from a sales growth and gross margin. You could buy that one too here. So with that, now let's jump into Paysafe a little bit and go into a little more details and see if we can buy it. And look at this very small company, PaySign, $2 stock here, $112 million market cap. Look here, nice gross margin. Sales growth is positive right now. Big, huge drop here, but still up 1000% in 5 years. You could look at some of these companies and be contrarian. Put some money and just forget about it. It will do nicely in in a couple months or a couple of years. So with that, let's jump in here, look at a few competitors and see how they're doing. Shift 4, one of my favorite stock here. As you look here, stock has been struggling off late after the last quarterly earnings. Right now on the balance volume is trying to go higher. It's a good one to buy at these levels here. As you scan through here, IVA percentile is 36, RSI is 47. You could even buy some call option if you want to, but it's a great play. I would buy and hold on to it. And then you got here Visa. Visa has been dropping, as you can see here. On the balance volume is pretty stable here. I would buy Visa at these levels here. IV percentile is a little high, it's 40. So if you want to sell some put option underneath the stock price or a put spread, you could do that too safely and go from there. And then you got Fiserv here, great fintech play, down big time after the earnings. Look at that huge big candle here. I would be a buyer of Fiserv at these levels. Stock price is 99, it came below 100. Good story. So you could buy some of this quality stock here and take it from there. Fiserv also nice sales growth, nice gross margin, along with the Shift 4 as well as Visa here. And then you got Western Union here. Western Union also came down big time, as you can see here after the earnings. Right now it's trying to consolidate, or on the balance volume is trying to go higher here. I would be a buyer of Western Union. Very low price stock here, just $18. you could buy this one too here. Keep watching here. Shift 4 and Western Union have got a little bit higher debt to equity ratio, which may be okay because they're in the money moving business here. Next, let's look at a few more here. We got RPAY here, Repay Holdings. Stock came tumbling big time down here. On the balance, volume is now stabilizing. As you look through, RPAY also has a nice quarterly sales growth, nice gross margin, and RSI is low here. IV percentile is a little high. So I think it's a good one to buy stock outright here. Call options are expensive because IV percentile is a little higher here. And then you got Pags here. It's a Brazil-based fintech play. I would be a buyer of Pags at these levels here. Huge big drop here. Brazil is undergoing some issues around the inflation. Consumers are a little bit, not in a great shape to buy. That's why stock came down here. I would be a buyer of Pags here at these levels. And go from there. Look here, IV percentile is very high. That means you could even sell some put options underneath the stock price and make some money that way. And then we got GPN Global Payment Network, one of my favorite stock. Stock came tumbling down here. Look here, nice sales growth, nice gross margin. You could buy this stock here. You could also sell some put option or put spread underneath the stock price here and make some money that way too. And finally, last but not least, we got Paysafe here. Big, huge drop after the earnings. Look here, on the balance volume came down. Stock chart is ugly here. And this one does not have sales growth here. Nice sales, nice gross margin, but we have 1 year sales growth. Look all the way from 1 day to 1 year, even even 52-week difference with 52-week high. All negative, big red here. I think at this time you got to be contrarian and believe in this company and buy the stock here and wake up after 3 months or say 1 year. This will do very well. So with that, let's jump in here and look at Paysafe into a little more detail and let's do a deep dive. As you look through from a snapshot perspective, we got here fundamentals of the company. Paysafe Limited, it's a UK-based company. Looks like it's registered in Bermuda, and analysts are recommending strong buy. This is going to change soon. This is going to be either hold or sell tomorrow, but as of now, it's still strong buy. And market cap is about, I think this also dropped now. Now it's around $2 billion market cap here. And as you scan through here, we got nice relative volume. Volume surged high today. That's why relative volume is 33.6 here. So overall, I think even the target got cut today. It's after the today's drop. Even target is cut big time. So let's look at how is the growth from a growth perspective. This one does not have a quarterly revenue growth, as you can see here. It's got some year-over-year revenue growth. And even earnings per share for this year, we are expecting a negative earnings per share. So that's why, as you look through, there is no growth for this company at this time. Earnings per share growth is negative. But next year it's positive. But after this big, huge drop, this might be also, get revised as you go forward. So overall, from a sales growth perspective, don't see huge sales growth here. That's why, we got to be a little careful. But after this drop, it may be okay to buy. As you look through the financial numbers here, debt to equity ratio is 0.81, a little high. They got some debt here. They got $248 million cash here, and they also have free cash, as you can see here. And they also got about a $2 billion debt here. So it's a significant amount of debt. So we got to be a little careful here. And as you look through here, they don't have too much return on asset or equity. I think they have to improve this situation here. And then as you look through from a return perspective or a performance perspective, all red everywhere. Even today, 41% drop. So I think this could be a good chance for us to buy and hold. I think it's a good one to own for the long term here. Company doing the right fund from a fundamental perspective. They're also investing in their own product here, but Wall Street did not like what they saw. As you look through here, institutions own 54%. Insiders also own a big chunk here. they have skin in the game. As you look through, we'll go into a little more details on the numbers here. From an earnings per share perspective, from an annual earnings per share perspective, right now it's not going in the right direction. That's why Wall Street does not like to see earnings per share going in the negative direction. I think they have to improve this situation here. And from a sales perspective, I think they're doing okay. As you can see here, a little bit flat. I would like this to improve, but right now it's a little flattish. And from a shares outstanding perspective, they're keeping it pretty constant here. That's good to go. That's a good news here. And as you look through quarterly revenue perspective, we don't have the latest quarter here, as you can see, but it's doing pretty okay. Latest quarter is a little more weaker, but that's why Wall Street did not like it. And as you look through here from an operating expense perspective, it's a little bit trending down in the 630 quarter, but in the recent quarter which they announced today, the operating expense also went up, which is not a good sign for Wall Street. And as you look through quarterly income, it's up, down, up, down. There is no predictability here. Wall Street does not like this type of chart here. They want some consistency. I think this company has to improve in the efficiency and consistency. As you look through here, they don't have too much historic earnings. They got two, and today they got one more quarter down the line, just 3 quarters from an earnings perspective. As you look through here, I would not hold my breath here. Market cap was 9 billion, it became 8 billion. Now after this big drop, it's 3 billion. So as you see here, this company is really not really doing great from a market cap perspective. That means they're struggling a little bit. I think it will take some time for this company to really, get their act together. From a price perspective, it is a $13 stock. It became $12 stock back in 630. Now it's $4. It's not going the right direction, but after this big huge drop, it could be okay to slowly buy. From a sales perspective, it's trending in the right direction as of now, but after the current drop here, after the current earning, it's a little weaker. And free cash flow is not going in the right direction, as you can see here, and operating cash flow is also not going in the right direction. Should have been positive here. Right now it's negative. Gross margin is okay here, not great, it's okay. And operating margin, net margin are a little bit better, as you can see here. They're improving. Price to sales perspective, it's not very expensive, which is okay. So overall, from net, I think these folks have to get their act together. Probably they don't know how to handle the earnings call. They say, they basically put everything out there versus really telling the story properly to Wall Street. That's why I think the Wall Street is really freaking out. I've seen a lot of conference calls where the CEOs and top execs, they know how to maneuver and really tell the right story to Wall Street, but this company is not there yet. They are basically just telling the story like they see it versus really trying to really construct the story in a positive way. So with that, as you look through here from an earnings perspective, as you see here, they got two nice earnings in the past year, but right now they missed on the earnings by the revenue missed by 17 million here. Wall Street did not like this at all. As you see a huge big drop today, 41%, because these guys missed on the revenue. They basically give a bleak outlook or a bad outlook for the future. That's why, and even expenses were too high. That's why Wall Street did not like it. Stock is really very, very ugly, tumbled big time. As you look through from a quarterly earnings perspective, today was the quarterly earnings missed by 1.06 million, as you can see here. Probably I think we have to remove this. This is a little bit older number here. Let's remove that. So from a quarterly earnings perspective, CEO said they got some issues here in their digital wallet business. That's why Wall Street did not like it. And also they talked about their payment volume here, which is increased by 19%. That's good here. Revenue decreased by 1%. Wall Street does not like that. And they're also doing well in some areas, especially in the North American gaming area and the crypto area. They're doing well. And they're also acquiring, as you see here, there's a German fintech company. Via fintech, they bought that company here. They also bought this Pago Effectivo. I think they're doing the right thing here, expanding their network by acquiring the companies. And they also had a nice 50% year to date revenue growth here in the North American iGaming. That's a good story. This company really knows how to grow here, and they know how to partner with other companies like Fubo Gaming, PlayUp, and so on and so forth. The main big news is really the digital wallet is weaker than expected, and they're also resetting their financial outlook here. It was set up for a 9% year-over-year growth. Now they're revising it down to 5% year-over-year growth. That's the reason for this huge big drop here. Could be a good opportunity to buy and hold. Now let's look at the performance of this company here through months. As you look through here, stock has done 56% back in 2020, and this year in 2021 down 72%. Ouch, that's a huge big drop here. Could be a good opportunity for us to buy and hold. As you look through here from a monthly performance perspective, company started back in November 2020 and did well in 2020, as you can see here. In 2021, the company is not getting good traction here, down big time. Probably they don't know how to tell a good story in their earnings call. They have to improve the situation and also manage their digital wallets business properly. And as you look through here from a weekly performance perspective, more red than green here. Lot of red here. Look here, couple of weeks here continuously red here, and huge big drop today, 43%. And as you look through here, daily performance today, look at the volume today, 209 million shares traded. I'm sure a lot of people are scooping up and buying also. That's why it's a good to buy at these levels here. It's really rock bottom for this stock in a long time. Look here on a monthly performance perspective, there is nowhere a 46% drop since the beginning here. This is the first time here, so I'm sure there'll be a nice bounce back as you go forward. And as you look through here from a chart perspective, from a technical perspective, this is a 1 year chart. As you can see here, nice uptick, went all the way to 19. From that point onwards, stock is not getting a foothold here, keeps drifting down all the way. The huge big thud and a drop here. So that's why I think we got to be a little careful here. As a contrarian, it's good to buy this company. I'm sure CEO knows how to tackle. He had been in the fintech world for a long time. As you look through here, we got Paysafe. It's a 1 year, 1 day chart here. With a little more details. Chart is super ugly right now. Look here, chart is really pointing downward, drifting all the way down here, and a big huge drop here. RSI is low here, came tumbling down. IV percentile is shooting up here. Look, IV percentile is 100%. Too volatile right now, and the red line, the DMI went higher, blue line came down, very ugly. On the balance, volume is down. Check-in money flow, which is smart money flow, is down here. So chart is super ugly. As our friend Warren Buffett says, when the chart is ugly, when there is a blood in the market, that's when you go and buy and hold for a while. I think we should apply that principle here on Paysafe and go from there. And if you look at the option chain here, stock is at $4.26. As you can see here, it went up as high as $15 in 52 weeks. If you look through the option chain here, look at $4 strike here. We got nice 288 contracts traded, open interest here. Look down here. As you look through here, we got a lot of contracts at $7. Lot of calls at say $8, $9, $10. all the way. So what folks are doing is they're taking advantage of this huge big drop here, and they're buying this longer term contract. This is the April 2022 contract here, or expiration here. Folks are loading up on this long term contracts and really buying cheap. Look here, they're paying 85 cents or 82 cents and loading up on these long term contracts. I think they're expecting a nice bounce back, which makes sense. Stock has dropped so much here. Only thing I'm a little bit, it's a very low dollar stock here, and the IV percentile is high. I would be buying the stock outright versus buying the call option here and paying a little more as IV percentile is high. But nonetheless, I'm bullish here because there is a nice open interest for the stock here. And as you look through here from a put perspective, keep watching the open interest here. There is some open interest at $8, but nowhere near to open interest in the call side of the house. And as you look through option statistics here, keep watching. We got call volume 254,000, put volume just 77,000. That makes the put call ratio 0.03. Anytime put call ratio is below say 1, that means there are more call option buyers than put option buyers. That's a good indication. And as you look through here, we got stock price at 4.27. Keep watching the VWAP here. VWAP is 4.4. That tells you stock wants to go higher. That's their, it want to gravitate towards 4.4 here. That's a good story. IV percentile is very high right now. That's why it's not a good idea to buy call option here. Even though a lot of people bought, I would be rather buying the stock outright at these levels. And as you look through here, we looked at the fundamentals, we looked at the technicals, we looked at the earnings. Let's see what we can do now. So as you look through the company here, their total payment volume increased by 19%. That is a huge volume going through the network, $31.1 billion. That's a great story here. Revenue decreased by 1%. Wall Street does not like this. And their execution strategy is very good here. They're winning in North American iGaming, and they're going after crypto here. That's very good. They're making progress here, and they're also going towards the cloud strategy, doing a lot of things on the cloud side versus on premise. They're doing some great acquisitions here with the Viva FinTech and also Pago Efectivo. That will really improve their network across the world. That's also good here. But on the negative side, their digital wallet is weaker than expected, and they're also guiding their revenue down here or resetting the guidance for 2021 and 2022. Their revised guidance is really, calls for a 5% year-over-year growth versus 10% they thought they will do. So that's why there's a 5% drop in the yearly growth here. Wall Street does not like this. And they're also doing very well on the North American gaming here. They have nice 50% revenue growth. Should have been in the green here, but that's a good story here. And stock promptly drops 41% here because they miss on the revenue, issues narrow full year guidance, and a lot of these analysts promptly they're downgrading the stock at this time. I don't know where they were all along, but now they're downgrading the stock and saying it's not a great time for this Paysafe here. So with that, what should we do now? So what I would do is really it's ugly. There is blood in the market. I would go with Warren Buffett here. Stock is overly punished. I would accumulate at these levels and go from there. So with that, thank you very much. Happy investing and trading.